Hey traders, welcome to lesson number 2 of the Forex A to Z. Um, what I am going to explain to you guys today, just to recap on what we had in lesson number 1, was support and resistance zones. In this lesson, I'm going to show you guys how exactly are you supposed to trade this type of movement in the market, this what we call impulse correction and impulse strategy or method. This is a very important concept in the market because it can help you to get in a good entry for the next push to the upside or to the downside of the market. Now, before I carry on with the video, don't make sure that you guys hit the like button below. Leave me a comment below, guys. Leave comments below. Also help the stream and help the community grow. And don't forget to subscribe at the end of the video. Now, before we go into it, let me show you guys something that you guys should all understand and all should know. Excuse me. So, in the first thing I would like to explain to you is what exactly is an impulse. Now, it is quite important to know what kind of momentum the market is in when the market is actually moving. Okay, so when the market makes a very big movement to the downside, when the market makes this type of um, big movement to the downside, we want to see, or we want to know that this big movement over here to the downside is what we call an impulse. So we have a big impulse to the downside. You can see on many pairs in the forex market, when there is a big movement, there is always quite a lot of pips or quite a lot of drop, or even a push to the upside. You will see that the market will create some sort of impulse. It's quite a big impulse to the upside. So it's a big type of movement to the upside or to the downside. This is what we call a impulse. So impulse for a swing trader and an intraday trader is a very important concept, because this is where swing traders and intraday traders are very interested in this pair, because we know as a swing trader and as an intraday trader, this can mean a lot of money for us. Okay, so when the market creates this type of move to the momentum to the downside, it is called an impulse. Okay, it is called an impulse, and this is where most traders are sitting on their hands and they're waiting for the market to actually create a correction. So we know that the market creates an impulse to the downside, but now we need to see the market create some sort of correction. Now, what I explained to you guys in the previous video is that when the market will break through a support zone, let's say for example a support zone, okay, when the market will break this support zone, the market will automatically need to come back again to this support zone. Okay, the market will need to come back again to the support zone. Once the market reaches that previous support, now turn resistance, then that is where a lot of swing traders and intraday traders are interested in the pair, because this means that the market can reverse from this area. The market can reverse from this area, and it can give you a possible good entry for a next push to the downside. So basically, what I'm trying to say to you guys is that this over here is the correction. So this movement to the upside is not actually what we call a reversal, but it is called a correction or a pullback. A lot of people call it a pullback. A lot of people call it correction. A lot of people call it. There's many terms for it, but I like to call it a correction, because it's actually an impulse move that we have to the downside. We have an impulse move to the downside, and once the market creates an impulse move to the downside, it then starts to make a correction. Okay, this is not a reversal. It is just simply the selling pressure getting eaten up by buyers, and then eventually when the market will reach its previous support zone, now turn resistance, then the market will actually start to reverse from here and create another impulse. So that is what we have in the market. It is called impulse, correction, and impulse. Now, I will show you guys quickly. how this actually works. It is very important that you guys pay attention and you understand this type of concept in the market. Excuse me. When the market will create this type of impulse, we should always be ready. Like I told you guys in the previous video, you should always wait until the market will come back and retest its previous support, now turn resistance over here. The same thing goes for a bullish market. If the market is a bullish market and the market actually breaks a resistance zone, okay, if the market will actually break a resistance zone, then the market needs to come down again for a correction in order for it to actually grab more buy orders. Okay, buy orders in that zone before it can actually continue to the upside. Okay, so this is what we call an impulse correction and impulse. So we have a nice impulse to the upside with a break of resistance. And in the previous video, it said break of resistance will then turn support and then continuation for the next impulse. So this is exactly how the market will work. When you guys are trading, you guys are able to see this very, very clearly. On any time frame, you can see when the market has already broken a support or resistance zone. You can see that the market will have to come back again to this zone in order for it to grab more orders, in order for it to actually continue to its desired direction. So it is always better for you guys to wait first, always better to sit on your hands and wait for the market to actually come back to you before you actually are going to enter the market. Now, in the next lesson, I will teach you guys how to be looking for an entry. I will teach you guys how to look for an entry on something like this. Okay, so we have impulse correction and impulse. This is how the market will move from any time frame. You can look from the monthly time frame, weekly time frame, daily time frame, 4 hour time frame, 1 hour time frame, any time frame. You can see that the market always will move in this type of wavy movements. Now, just to explain a little bit more in detail, you can see like in the market, when the market creates an impulse, it will then create a correction. Okay, after that it will fall to the downside, which means that it's actually making a lower high and also a lower low. Okay, so market will come up again after that and for a correction and then continuation to the downside. So it is creating a lower high and also a lower low. And the thing is that you need to remember is that the market always retesting the previous support, now turn resistance, and that is where most of the people are waiting to actually sell this type of pair. So the same thing goes as for a bullish market. When the market is creating a nice impulse to the upside, it needs to create a nice correction in order for it to actually move to the upside. After an impulse, we need to see a correction and then movement to the upside. So it is creating basically a higher low, higher high, higher high, higher low. And it is also retesting previous support or previous resistance, previous resistance now turned support in the area. Here is previous resistance and here is previous here is the new support area. So I hope that you guys enjoyed this video. It is a very simple strategy, and keep watching because I will give you guys much more lessons that you guys can use to profit every single day in the Forex market. Please don't forget to hit the like button and also hit that subscribe button in a few seconds. See you guys in the next video. Have a great one.